Thank you very much, Ajit, for joining us today. Just to get the conversation started, you have always mentioned that you have been at odds with the financial services industry. Could you elaborate on that for our viewers?
So I think the most important word in that phrase is services. A service provider is a professional who provides a service to a customer or a client. My father was a doctor and he provided a service to his patients. And when he examined a patient, he looked at what was good for the patient and then prescribed the medicines or the diagnostic tests that were required to make the patient healthier. He never worried about, what the pharmaceutical company is going to give him as a commission for prescribing a drug, nor did he worry about what a diagnostic center is going to give him as a commission for recommending a test, because they may be unnecessary, they may not be good for the patient. In a very similar way, the field of finance in India and globally, just like the field of medicine, is fraught with danger because professional service providers have become business people. They don't necessarily focus on what is good for the customer. They focus on what is good for their own P&L. And that's where the breakdown, I think, has occurred. And that's why, Quantum was set up in some sense to create an alternative, to say, here's a firm whose sole focus, whose sole purpose is to serve the customer. We have the integrity and the ethical framework to state that on a hour by hour daily basis for the rest of our lives, and ever since we started Quantum in 1990. And we've also got the competence. So two things you must look at, right? Integrity and competence. There's no point going to an honest doctor if they don't know how to deal with your health. There's no point coming to Quantum. We may be honest, but there's no point dealing with us unless we're competent.
You have always mentioned a difference, a very clear distinction between gambling on one side and having a disciplined investing framework on the other side. Could you explain that?
Sure. I gambled when I first started in 1977. There were a spate of IPOs in India: Colgate, Mather and Platt, Remington Rand, Lever, because as foreign companies in India, as fairer companies as they were called, they had to sell shares to Indian locals at a really discounted price. So I jumped on the bandwagon, and you applied for 1,000 shares. If you got 100 shares, they went up by 5x, 10x, 20x in price in the course of a few months. On listing, it used to take 3 months to list in those days. So you made a lot of money. But there was no one really cared what the company was doing, just that they were offloading at a low price and you jumped on the bandwagon on the bandwagon. Somewhere in the 1980s, I started studying. So I did my BA in economics, finished that in 81 from JN College. And then I went to the US, my MBA, finished that in 1983, worked for a year in the US, and I came back here. And that's when you took the competence, if you will, away from gambling instincts, to actually investing. And I think that's important because in this entire journey, Tom Hansberger taught us value and other stuff, and we'll come to that in a minute. But we created a framework in which you buy shares and you allocate capital rather than buying silver because the Hunt brothers bought it in the 1979 and you knew you were going to make money buying it and flipping it in India. So we don't gamble anymore. We're now a professional investment advisory firm with processes in place on the research side and the portfolio construction side.
That is a crucial point to highlight. Having a disciplined investing framework is very important from even from a retail investing point of view. You also mentioned integrity. I've heard that Quantum has launched a specific integrity screener, and this was done way
Correct.
back in 1996. Could you elaborate?
That's right. Sure. So 30 years ago, we launched the integrity screen because at the time when I was managing money for Jardine Fleming from 92 to 95, as I indicated, some things didn't sit well with me. So I left. In 1996 is a bellwether year for us because Subbu joined that year. Subbu and I have now built Quantum together for the last 30 years. And that's also the year when we launched equitymaster.com. It used to be called quantumindia.com in those days, and then we changed the name a few years later. But the integrity screen was set up for us to ensure that we try to minimize the risk of investing in companies where founders, senior management, CEOs have bad intent, that they're not trying to steal money which belongs to minority shareholders. So it began with 10 indicators, and today we have over 200 indicators and a dedicated team whose only job is to check the governance or lack of governance in companies that we invest in on behalf of clients.
Ajit, you mentioned Tom Hansberger of Vanguard fame. Uh, what was the influence that he had on your investing processes?
So Tom was the co-founder of Templeton, Galbraith, and Hansberger, now called Franklin Templeton around the world. So Sir John Templeton and Tom were one of the earliest investors in terms of the value style around the world. As much as Warren Buffett is known for value investing in the US, uh, Sir John Templeton and Tom were known for value investing outside the US. They invested in Germany and Japan in the 1970s when Germany and Japan were kind of tin pot emerging market economies. You know, you got toys made in Japan meant to be low qualities, etc., etc. So that's how early they were. We were fortunate to meet Tom in 1997, and this is 7 years after I started Quantum, and 2 years after I broke the joint venture with Jardine Fleming, and a year after Subbu joined, and a year after we set up Equitymaster. So I was fortunate enough to meet Tom. He liked what we were doing, but he said, "You know nothing about investing. Come and live in Florida. I will teach you investing. I will teach you value investing. And then you go back to India after that." So I was in the US for about 7 years. And while I was with Tom, I was appointed by him as the lead manager of a mandate we won from the Vanguard Group. It was called the Vanguard International Value Fund. And it's quite an honor to be a Vanguard fund manager. In fact, I'm probably guessing I'm the only Vanguard manager in the boutique in the world who happened to manage a Vanguard fund in America and has come back to India with all the skill sets that Vanguard taught us on how to build an investment firm whose focus is on processes, research processes, portfolio construction processes, and a clear and unwavering focus on doing what is good for the investor. So the ethical framework that Subbu and I grew up with in our households has been given a formal structure by what we learned from Vanguard. And our instincts that we had of gambling in the 1970s, which we converted into full-fledged processes for investment, was sharpened by our time with Tom Hansberger when he taught us intrinsic value and how to follow the value investing process, which is what we follow at Quantum and Equitymaster.
It's a fascinating story, Ajit. Could you trace that story all the way from the 1980s Quantum Equitymaster and what lies in store?
So I think that if you go back, like I mentioned, 70s, Ajit is gambling as an individual with his own money, playing around and mostly making money out of luck. In the 80s, you get the formal education and you start thinking about where India is going and you begin to formalize it. 1990, you create the structure, which was Quantum. 92, 95, you have the first joint venture between a foreign company and an Indian company in the field of stock markets and investing. 1996, we actually set up the first venture capital fund, but that's also year when Subbu joined. 1996, we also set up Equitymaster. 1997 till 2004, our experiences of working with Tom Hansberger when I lived in the US and moved to the US and managed the Vanguard International Value Fund for 4 of those 7 years that I was there in the US, and then came back to India in 2004. India was inexpensive, exciting. We had SARS, etc. The brick story was just about beginning at that point in time. Should I say the brick fable was beginning at that point in time. And then 2006, we get the domestic mutual fund license. We launch our first fund. And here we are, 2026, 20 years later, offering the wealth advisory service to those who are interested in what we do and like what we do.
Best wishes to you, Ajit. The wealth advisory looks great. Hopefully, you'll have a great future ahead. Could you wrap up our discussion with one message to the Indian investor?
So firstly, I would say invest your capital, gamble with your money. So make a distinction. Have your play money, do what you want to with it, fool around with it, you lose all of it. It should not change your lifestyle, shouldn't do anything. But when you invest your capital, that is for your financial objectives. So do read more about what we do, listen to what we have to say, and just give us a chance to explain what we do. And then it's up to you to decide whether you believe in the ethos that we have whether what we are doing makes sense to you or not, or whether it doesn't matter to you whether you make money from, gambling or from investing. So for those who want to gamble and try to make 30, 40, 50% compounded rates of return year after year after year, please don't come to us, because we have no idea how to do that. But those who have capital to invest and want to see capital compound in a steady, safer way, of course, markets go up and down. There is, market movements of peaks and troughs will not go away. But of course, you have asset allocation, you have ways to minimize risks, and you have ways to maximize returns. And that's what we try to do.
Thank you very much, Ajit, for this conversation. It was great talking to you. Hopefully, we can do this again sometime.
For sure. Thank you very much.
Thank you.